Hi, my name is Anton Stetner, and today we are going to review December real estate statistics. And let's talk about where the market is headed in 2023. As you know or don't know, the market has been dramatically changing. And so let's review those numbers together. And if you could help us out by clicking that button, making a comment below, and/or subscribing. Snohomish County real estate, Snohomish County home values. Let's look at the average price here in Snohomish County. You can see in May that we peaked at 848,238. The run up to this, that's that normal spring market that we were coming into. And then we saw the market start to decline and trend in a downward direction once the Federal Reserve raised interest rates. That raise in interest rates caused this decline right here. From the peak to the bottom, we saw 136,000 or 17.5% off. We finished the year in Snohomish County at an average price of $711,688. For perspective, that was down from December, which was $738,000, down 3.7%. January of 21, you can see we started at $571,000. And we had 2 years of way above average appreciation. And what's happening is now that interest rates have shot up, that some of this above average appreciation is going to get reclaimed. The market ended with that price compression. You're seeing a little bit of depreciation. And as we continue looking forward in 2023, we believe the market's going to go down another 5 to 10% from where we currently are. Inventory is going to remain low. Interest rates are going to be on the higher side, although we do expect them to trend down towards the latter part of this year. And we're going to be in a seller's market that's behaving like a buyer's market. When you look at Lake Stevens home values, or the average price in this case, Lake Stevens was showing it was still trending in an upward direction. What this was sometimes you've got to take a second, you've got to look at all of the data that's available. There was a very expensive home on Stitch Road that sold for $2.6 million, and so that pulled up this average price here in December when transactions are naturally lower. So then we had to look at the median price to see which way the market was trending. When you look at the median price, once again, you see the same trend that we've seen all throughout Snohomish County. See that Lake Stevens peaked in May at $760,000 and then went down to $657,475 to finish the year. From the peak to the bottom, that was 102,000 lost in equity, or 14.5%. But realistically, it was only mild depreciation between December of 21 to December of 22 of 2.5%. We were basically at 671 December of 21. We finished at 657. For perspective, we started January of 21 at $540,000. We believe the city of Lake Stevens is going to continue to be a seller's market. Inventory is going to be low. The days on market is going to trend up a little bit, but we're going to be in that seller's market that's behaving like a buyer's market, and that the market is probably going to depreciate another 5 to 10%. Now, in the grand scheme of things, it's really not that much, especially because we've had above average appreciation over the last few years and even over the last decade. If you have any specific questions about your property or the market in general, please feel free to leave them in the comments below. Send us a message, pick up the phone, give us a call. We're happy to answer your questions and here to help. When we dig into Marysville, the average sales price here in May peaked at $666,905. You then saw when interest rates went up, the market trend in a downward direction. This was $114,000 in equity that was lost, or 18%. December of last year, we were $577,000. December of this year, $552,000. So down 4.5% from where we were last year. So where's the city of Marysville going? The city of Marysville is probably going to drop another 5 to 10% from where we currently are today. And we're still going to be in a seller's market, high interest rates, behaving like a buyer's market until we get price stability by the Fed holding or pausing their rate hikes and interest rate stability. If you have any questions about Marysville, your home, your investment property, and how it relates to the market, let us know. Feel free to drop us a comment below, send us an email, pick up the phone, give us a call. Happy to answer your questions of what's happening in relation to your property or a property you'd like to buy here in our local market. When we look at the average sales price here in King County, this is just mind-blowing. So the market was just on a tear shooting up, way, way, way above average appreciation. So if we rise really high, we've got a long ways to fall. The Fed then started raising interest rates. The market peaked. Then the market started trending in a downward direction. You can see the market peaked in April of 22 at 1.1 million in King County. The market then dropped to 904,000. This is $200,000 coming off of the average price of a home in King County, or a little over 20%. When we look at December of last year, that was 943,000. You can see we then dropped to 904,000. January of 21 was 802. So from December to December, depreciation. From January of 21 to December of 22, still up. So where's the market going from here? The market is going to continue to depreciate probably another 5 to 10% from where we're at currently. The reason for this is simply affordability. As interest rates came up, things got more expensive, and that is being compensated for in the price of the properties. We will be in a seller's market with low inventory. So if you find something you like, you're going to have to jump on it. Their seller's market is also going to behave like a buyer's market. In other words, homes are going to have to be priced correctly and positioned correctly inside the market in order to achieve a sale in a reasonable time frame. The other thing that's going to happen is the market will continue this kind of downward slide in depreciation until the Fed stops raising interest rates, or the Fed fund rate specifically. Inflation expectations continue to cool, and then we get kind of interest rate and pricing stability. As that consumer confidence comes in, what happens is the market will naturally set into a floor, and then it will go up from there. However, I do expect this year to be a down year. Once we come out of this year, looking into the long term, I would expect us to have above average appreciation due to supply constraints because of the lack of new construction throughout the whole Seattle metro. Overregulation and the cost of land is making it cost prohibitive to pump out tons and tons of houses. Long-term prices are going to be very expensive here. If you guys have any questions about your property or about the market in general, please let me know in the comments below. Send us an email, give us a phone call. We're happy to help and answer all of your questions.